see her. Can't hear us. Anisha, can you hear us? Oh, she can hear us. She nodded.
I could hear you now.
Okay, so you can hear us now, so we're good, right, Anisha? Okay. Ready, Bruno? We're ready to go.
Call the order to the meeting to order. And we could start with the opening prayer in the name of the Father, the Son, and the Holy Spirit. Amen. Bless us as we gather today for this meeting, so that we will work good of our community and help just to be generous in our outlook, courageous in face of difficulty, wise in our decisions. Father, we praise you forever. Approval, land acknowledgements.
Like faith, like our faith, the land is rich in history and in mystery. Mystery is both our shared tradition and our shared challenge. To work humbly to learn about and from one another and the world around us. The land has, quite literally, seen it all, and physically and metaphorically is a silent and ever-present reminder of past and present glories, and past and present ignominy, exhorting us always to action, together with the land of which the Michi Zagig of the credit, our treaty partners have been stewards generations. We must commit to beauty and peace and fight injustice and actively, passionately, resolutely create a future with hope.
The agenda moved by Trustee Thomas. Any questions? All in favor? Any opposed? Carried. No declaration of interest. Approval of the minutes of the Audit Committee, September 12th, 2023. Moved by Laura. Any questions? In favor? Any opposed? Carried. Julie, next order of business, please.
Yes, thank you. We have no awards or presentations or delegations. So section D is reports from committee administration for receipt. I'd like to welcome our regional internal audit team who will be presenting this evening. They're with us virtually. Paula Hatt, the senior manager for RIAT, and Judy Salvadori, manager with RIAT. So I will pass this over to Paula, I believe, who will be going through the regional internal audit update and annual report that starts on page 8 of your agenda.
Thank you, Julie. So I pass it over to Judy, who will be doing the presentation today.
Okay, thank you, Julie and Paula. So we are going to be on page 10. So this is in order to provide an update of the outstanding engagements, as well as what the regional internal audit team activities has been taking place. So on page 10, you can see that there are 3 outstanding engagements. The first one is the IT asset management. This was part of the 2020-2021 audit plan. This engagement has still not started for the reason that there has been some turnover in the IT area, specifically the CIO. So the regional internal audit team is in contact with management just to see the timelines and when this engagement can be started. The next one is the legislative compliance. This is a tool that the regional internal audit team, in collaboration with another region, developed. Basically, what it does is it compiles approximately 220 pieces of legislation that school boards are supposed to comply to. The tool has been provided to management to complete. We will be focusing on the high risk legislations. Currently, so it is in field work right now, and we are waiting for management to complete the requirements of this tool. Majority has been completed. There may be about 25% that needs to be completed. The next engagement is a benchmarking engagement. This is also in the fieldwork phase. This was part of the 2022-23 plan. And this is a consulting engagement. Basically, what this engagement is for is to compare administrative and governance staffing positions amongst similar sized boards. So we are going to be doing some benchmarking for 5 boards that includes Dufferin Peel, and see, we'll work with any anomalies and provide some analysis, some analytical data to the board. So we have been working very closely with the executive superintendent and finance, the CFO, with trying to categorize some of the positions and come up with a database so that we can benchmark apples to apples. We will also be using some of the EFIS data. That's the Ministry of Education reporting financial system. We'll be pulling some data from there to get some statistical analysis. The next piece is the follow-up activities. So we have conducted follow-up procedures on 2 engagements. These are audits that were conducted previously. We finished the repairs and maintenance as well as the transportation. So in our mind, these 2 audits are considered closed. If you have any questions at this point, I'll just want to pause. And if you have any questions, I can answer them before I get into the next section.
Any questions?
Okay, so the next section is the RIAT annual report. This is to conform with the internal audit charter as well as the IIA standards. That's the Institute of Internal Auditor Standards. We would do this annually and just present, a report indicating our activities. This will be presented to the other boards as well. So if you go into page 12, that's where it starts. I'm not going to go into it in detail. I'll just summarize every section. So the introduction, as you know, we provide services, internal audit services for 6 boards. We are governed or guided by the internal audit charter as well as the IIA standards. The next piece is the mandate and the purpose. Again, we provide the internal audit services as well as consulting services. We are objective and independent. If you go into page 13, the structure and staffing, there's been no change in the staffing. The annual independence confirmation, we functionally report to each audit committee, but administratively, we report to the CFO of York Catholic District School Board. They are the host board. Professional development membership. So all staff within our regional internal audit team are professionally designated. Some of us have the CIAs, which is the Certified Internal Auditing. So we are governed by certain professional development credits that we have to show, and we comply to all that. If you go into page 14, that's the Quality Assurance and Improvement Program. So the way we go and conduct audits at school boards, we want to be audited, like people, we are trying to get ourselves assessed. So that is the whole process. Paula Hatt has been heavily involved in developing this whole process. So we have been conducting some readiness assessments, internal assessments. There are 52 standards and 36 standards we comply to, partially conforming to about 8, and we don't conform to 1. So we are working on that to, fully comply to these standards. There are 7 standards that are not applicable to us. The appendix is on page 22, and we can go through that very quickly. So there's an external assessment that we plan on doing in the 2023-24 year. And then 5 years after that, we'll be doing this assessment. We will engage a consultant or an external firm to come and do this assessment. So page 15, the REACT plan and activities. Basically, what this is saying is the second year, we are going into the second year of our plan. So for the 2023-24, there were 2 engagements that were approved by the audit committee, the succession planning for critical positions, as well as the IT asset sustainability. We don't, we don't see any changes to these engagements. So we are going to be proceeding with these 2 for the next year. Page 16, I'm not going to go through that in detail because this was already presented in May 2023. This is basically a signed copy. It's the internal audit charter, the regional internal audit charter. So that goes through until page 21. And then page 22 is what I just mentioned about, the self-assessment that we have done. That concludes my presentation. If you have any questions, I will gladly answer them.
Any questions? I don't. Anisha, can you hear me? Do you have any questions?
No, I don't.
Okay, thank you. Thank you, Judy. Thank you, Paula.
Thank you.
Judy,
Okay.
Julie.
Through the chair,
Thanks,
thank you. Thank you for the presentation, Judy and Paula. We move to section E, reports from committee administration requiring action. E1 is the appointment of external member. So through the chair, this report comes forward to recommend an appointment for an external member for audit committee. Based on the regulation, audit committees require a certain number of members at Dufferin Peel. That is 5, which is composed of 3 trustee members and 2 external volunteer members. One of our external members finished their 2nd term in September. And prior to that, we started an advertisement campaign to recruit for another member. We started that back in July. In October, we put together a selection committee as required by the regulation and our own policy and gap. The selection committee was composed of the chair of the board, the chair of audit committee, the director of education, and the executive superintendent of finance, CFO, and treasurer. We conducted interviews with 4 potential candidates, and the candidate selected to be appointed is Mr. John Boots. So this motion recommendation this evening is to appoint Mr. Boots to be a member from November 2023 to November 2026.
Thank you, Julie. Are there any questions on this motion? Can I have Laura? Can you move the motion? Any questions? All in favor? Opposed? Carried. That's motion number 1 on page 25. We need to read it, Julie.
We're okay. I'm not sure. Yeah, that's fine. Thank you. To the chair. We move to E2, which is the consolidated financial statements for the year ended August 31st, 2023. Report starts on page 26 of the agenda, and I will pass this to Superintendent Hester, who will introduce our external audit team who's with us this evening and present the report.
Thank you, Executive Superintendent Charapaka. Good afternoon, and through you, Mr. Chair, I am pleased to summarize the results of the consolidated financial statements for the 2022-23 fiscal year ending August 31st, 2023. Briefly, before I begin, I'd like to recognize some of our team members, including Ezra Cyrus, our Manager of Accounting Services, and Carrie Salemi, General Manager of Financial Services, and the rest of our team for their significant efforts to get these statements together, always under very tight timelines, and to complete the large Education Finance Information System package, or what we call EFIS, which will be submitted very shortly in the next couple of days, which consolidates all the information required by the Ministry of Education. It's always a very tight turnaround to close things off and then consolidate all the reporting requirements. So also this year we had some additional challenges with some new accounting standards that we had to implement. So a very good thank you to our team for putting all that together. I'd also like to note that we've worked very closely with our external audit team from BDO Canada. And today I'm pleased to introduce Marcus Sconsi and Mohammed Solomon from BDO, who will present a little later on the results of the year-end audit. It was, as I mentioned, another challenging year because of some of the items I'll highlight today, but the largest component is a new accounting standard called asset retirement obligations, which had to be implemented by all school boards for this ending fiscal year. I'll start by reviewing the reports on the package E2, which begins on page 26, and then I'll highlight a few areas from within the financial statements themselves. Each year, we prepare our financial statements in accordance with the public sector accounting standards and the Ministry of Education's requirements for tangible capital asset reporting. The statements are reviewed by our external auditor, as I noted, BDO. The statements themselves have very few changes to the format, but I will highlight some of the figures and certain financial statement notes during my walkthrough of the consolidated financial statements. So as I mentioned, it was another interesting year with the implementation of the additional accounting standards. And the largest component I just mentioned was what we call asset retirement obligations. This is public sector accounting standard 3280. So in the financials themselves, we have an operating deficit of $19.8 million. However, to see the true results of our operations, we have to remove certain items that the ministry does not deem related to budget compliance. That would be for items such as revenues used to purchase land. So from our education development charges, we must set aside that money. It's not available for regular operations. Same for our school generated funds. There's money that sits aside there and raised by parents in the various different bank accounts. That's not available to us to use for our operations. So that's outside of our budget compliance. And a few other items such as the interest accrual amounts on their long-term debt, as well as the asset retirement obligations that we implemented this year. That leaves us with a compliance operating deficit of $19.6 million. Overall, it's critical to note that the deficit is caused again by one significant ongoing budget pressure, our long-term disability plan, or what we call LTD. The obligations of the LTD plan provided for in-year costs this year of $31.3 million, which is a significant cost to absorb. But the good news, if there is any, is that it's much lower than our original estimates and lower than last year. A little later on in the presentation, I'll note where the LTD kind of fits into our financial statements so you can kind of see the impact of that. Also mitigating the deficit this year was some revenues from a special Minister of Education approved one-time revenue inclusion of $20.7 million related to proceeds of disposition from a prior property, a vacant piece of land that we had sold. So with minister approval, we were able to recognize $20.7 million of revenue into our financial statements to assist in mitigating our overall accumulated deficit, which keeps accumulating as the impact of LTD continues to affect us. So I'll now walk through the financial statements and the notes themselves. So these are included in the package. I'll pause at the end of my presentation just to take any questions on the financial statements themselves. And then after that, I'll hand things over to BDO to walk through their presentation and the results of the year-end audit report. So let's dig in. So I'll reference the page numbers in the package so you can follow along. First page, so page 31 is the management report, which outlines the responsibilities of management ourselves. And we're responsible overall for the controls over our assets and the reliability of the information provided in the financial statements. Page 32 and 33 are the auditor's reports, which I'll leave for Marcus and Mohammed to reference shortly. But I'll note that the board does continue to have an unqualified audit opinion again this year. Page 34 is the first financial statement, called the Statement of Financial Position. And I'll just highlight a couple of changes year over year for some of the more significant changes. So first, our board continues to be in a borrowing position as of August 31st, as reflected by the temporary borrowing line, which is in the second section called Financial Liabilities, listed as temporary borrowing. And that is, again, due to the pressures and cash flow impact of the long-term disability plan. Just going back up to the top under financial assets, though, we do reflect a cash balance. That is solely tied to the amounts of our school-generated funds and school council funds held by the various bank accounts at the school level. Going back to financial liabilities, there's an increase in the accounts payable province of Ontario. This relates to a loan from the province of Ontario to assist with our short-term cash flow needs, again, tied to our LTD challenges. Just below that, there's the deferred revenues balance, which has decreased quite a bit from last year. And that is, again, tied to that one-time inclusion of revenues from the proceeds of disposition from that sale of a property that we've brought into revenue this year. And then finally, on the last line of financial liabilities section is the line called asset retirement obligation. So that is the recognition now of the new public sector accounting standard that we must follow. So what this is, it's tied to the implementation of that standard for all entities where you have to recognize the future remediation, so the cost to fix or remove any designated substances from our facility. So in this case, the substances that we have in a part of our fleet of our building, kind of pre-1990, is asbestos. So really the standard wants us to quantify what the future cost will be if we had to go and remediate or remove all that asbestos from all of our buildings. So obviously that would be a significant undertaking, and we don't go and do that all at once. But as we either renovate or make capital changes to our facilities, and we have to carefully remove some of that asbestos as part of that capital renovation, then we would reduce that liability over time. The board has followed ministry guidance and worked with our external consultants to assist in determining what that estimated liability would be for our board. Going to page 35, which is the statement of operations. This reflects the financial results for the year, so our revenues compared to our expenses. For revenues, our grants for student needs, or our GSNs, are inclusive of our provincial legislative grants, our primary funding source, also combined with the education property tax revenues that we receive from our local municipalities. These amounts are up compared to last year due to increases in the funding benchmarks as we implement the collective agreement frameworks as negotiated by the province. Other provincial grants represents amounts for our what we call PPFs, our priorities and partnership funding. These are special grants for targeted initiatives by the province. It's down quite a bit year over year because last year there was a lot of money set aside for supporting us as we got ourselves kind of out of the COVID world. So those grants, the majority of them ceased this year. You can also see tied to that, there's a large return to increased activities within our schools as our school generated funds balance for revenues and expenses has come way up over last year. And again, that's a return to more in-class activities and extracurricular events. Other fees and revenues includes that one-time recognition of that $20.7 million from the proceeds of disposition from the sale of that vacant property. Moving down to expenses. Expenses have decreased overall. Part of that is due to a decline in our enrollment, also with a reduction in a lot of that COVID supports received from the prior year. Also combined there is a reduction in our LTD costs from last year as well. So these are part of the LTDs, part of the benefits, which are spread amongst all the different lines, which I'll show you in a separate note to kind of show you the impact in a different way. We can see the impact of LTD a little clearer. Overall, the annual deficit reflected there is $19.8 million. One final note at the bottom on the right-hand column there, there's a couple of restatement references. So what we had to do is make a comparative number for last fiscal year, 2022, for that new accounting standard. So the asset retirement obligation was kind of set up as a beginning balance, and the impact to last year's financial operations was the $13.7 million. The next two statements on the next two pages just provide further detail on the statements we just reviewed and explain the change in our net debt balance and our changes in cash flows. So now I'm just going to skip ahead to a couple of specific page references in the notes themselves, which add extra detail to kind of explain some of the actual financial statements we just went through. Moving to page 39 is note 1D. So this was a new standard that we had to follow for the year called financial instruments. However, the board doesn't have any qualifying instruments that would be within this standard, but it's referenced there for how we would follow that standard if we did have instruments that we'd have to comply with that. Moving down to page 44. Note 2 outlines all the new accounting standards that the board must comply with, including the asset retirement obligations I just spoke to. It's quite a large section there, so I'll skip ahead to a few notes that give a little more detail on the asset obligations themselves. Skipping to page 49, note number 7 and note number 8 provide additional details on the impact of the ARO standard, including the retroactive impact to last year's financial statements. On page 54, note 11 displays our expenses by the type of object. So showing there shows salaries and wages, employee benefits, and various other categories. The second line down there is employee benefits. So that includes the impact of our long-term disability amounts. So if you look there, as I noted, year over year, 2023 compared to last year, it is quite a decrease. And again, that's good news, although LTD still remains a significant challenge for us. It's good news that it is a reduced amount compared to last year. And finally, at the very end of the package of the statements on page 62, there are two new notes there. Again, one is future accounting standards adoption. So there's another batch of accounting standards we'll have to review for the impact to our accounting for next year. And then finally, note number 26 there is extra disclosure on risks arising from any financial instruments and risk management and how the board takes into consideration risks of balances within our financial statements. So I'll pause there at this point just to take any questions on the financial statements themselves before I hand things over to BDO to go through their year-end audit report presentation.
Thanks, Brian. Any questions? Laura, go ahead, please.
Sorry, through the chair, can you use the microphone?
Through the
Laura?
chair, with under note number 9, item 2, sick leave top benefits. I'm seeing that it's 290 million this year. Is that correct?
Through the chair, that would be $290,000.
Oh, thousand, sorry.
Yes, I should
Right.
know that. That's a good point. It's rounded in extra 3 zeros there. So that would be, it's in millions of dollars, so $290,000.
Okay. No, that you've got it right. I read it wrong. So I'm just curious about the drop from 927 last year versus this year.
So through the chair, we get to August 31st, we analyze the remaining carryover sick leave balances by employee and send all the data off to an actuary. And they have to assist us with costing out the estimated chance that people will use that carryover sick leave days in the next fiscal year. So there's still a lot of sick leave being utilized, but the estimates are showing that there'll be a lesser amount of days kind of on hand to be utilized in the future. So I guess you can look at it in some respects, it's good news that the balance has dropped, our liability has kind of decreased, but it's still our best estimate of what the usage on sick leave will be. No crystal ball on that one. Same for long-term disability. That's the challenge in trying to estimate those costs.
All right, thank you. Also, at the beginning of the report on page 26, there's a mention of At the very bottom there, the last sentence, as of October 2023, the school board has changed to an insured LTD plan. Can you just briefly explain what the difference is? I mean, I know, but I'm kind of trying to understand what the impact is.
Absolutely. Yeah, through your chair, that's an excellent question. So we've analyzed every nook and cranny of long-term disability to try and manage the costs that we can. We can't eliminate the benefits, but we can try and mitigate the best we can the cost impact to our system. The last available tool was to examine the financial model of that plan. So for all prior years, the board would pay premiums based on estimated cost for the year to our carrier. And then at year end, we'd have to wait to get a financial statement from our carrier. And that would take into consideration our premiums paid and then the costs going up and down for the people coming in and out of the plan for regular usage, as well as the future estimated costs if someone has to go in that plan that could be on a long-term duration. So year over year, we have very big swings in the costs because of the way we're basically self-funding those costs. So whatever the costs are, we must pay that premium and then pay the carrier after year end a big amount potentially if the cost went up through the year. For the past couple of years, that's where we're seeing very large amounts kind of into COVID and post-COVID for the impact of people, especially within mental health as a new diagnosis going into our long-term disability plan. That's why there's such a big impact on the board because we have to absorb every single dollar of that cost. And it's hard to predict what those costs will be year over year. It makes it very challenging for us to build that into our budget. And we have to wait till year end to see what the overall costs would be. Under the new model, we've gone into an insured product. So basically, the carrier takes on the risk. We pay a premium, no different than your insurance for your home or your car. And that's the cost we will pay. So we won't see any more swings up or down. And the insurer at that point has to absorb any risk or any benefit of premiums versus the cost impact. So it will really greatly assist us in stabilizing our costs and assisting us with kind of managing the costs internally.
Through the chair, so I assume that means that the savings will be in the future and we've already incurred in these financials, whatever cost came from self-funding the LTD. Is that correct?
So through the chair, yes, that's correct. So as of August, and it was really one more month with the former carrier under the former plan, everything is paid into that plan, and money is set aside for any impact of those individuals in that long-term disability plan. And then as of October 1st going forward, the risk is all on the carrier now with the money that we pay to them for annual premiums. So we shouldn't see any more costs other than what our premiums are going forward.
Good. I think you answered everything else in your summary. Thanks.
Thank you, Laura. Any other questions? Seeing none, please continue.
At this point, I'll hand things over to our BDO colleagues to go through the year-end results of their audit. Again, just for introduction, we have Marcus Sconsi and Mohammed Solman will conduct the presentation.
Brian,
Welcome.
microphone is closer. Okay.
You almost have to swallow it.
Fair enough. All right, through you, Chair, we're pleased to present the audit final report to this committee for August 1st. For doing so, I just wanted to extend a thank you to Brian, Carrie, Ezra, and the team for putting up with BDO. I know auditors give you a second job for a few weeks of the year, so we definitely appreciate that team, and we very much. I will start us off, and then Mohammed is going to finish the second portion of the letter. I am going to scroll us down to the audit at a glance page, core of our letter, highlighting a few items. First of all, the materiality we conducted our audit at. We presented at planning a $20.8 million materiality that was adjusted slightly downward to 20.2. We based the materiality at planning based on the prior year, and then we adjusted. Second item on that page of importance is fraud. Just a reminder that as auditors, we do consider fraud in the context of the audit. If there is fraud, we have to respond to it accordingly. We were not made aware of any fraud or suspected fraud that required further investigation. And the final comment on that page is independence. BDO is independent of the board, which is a requirement of any auditor to conduct. And finally, before moving to the next page, I just want to remind everybody that my contact information is there, and I do encourage open lines of communication at any point during the year. If there are questions, comments, or concerns, please do not hesitate. On to the next page, page 5, status of the audit. So we have substantially completed the audit. You'll see there's 4 items listed on this page as being outstanding. First, there's a few legal confirmations we're waiting to receive back. We do date those as close as possible to today's date in order to cover as much of the period as we can, so that's not uncommon at this stage. The other 3 items are housekeeping for the most part. The statements approved by the Board of Trustees. Once we receive that approval, we will ask management to sign the rep letter, which is included in the appendices to this letter, and then we will conduct a subsequent events pop-up that date in order to be able to see here that we note Appendix A is the draft independent auditor's report, and it is a clean or unmodified opinion, which means we carried out our audit as planned and did not encounter anything. On to the next page, the significant risks and planned responses. The 3 items on this page I'm going to go through fairly quickly because they're recurring and there were no changes from planning. First is the complex IT environment. Anytime we audit any organization with a complex IT environment, we involve our IS audit specialists. They assess your systems from a security and control perspective to ensure that we can rely on the financial information coming out of those systems in order to be able to have comfort on those numbers in forming an audit opinion. As you can see at the bottom, we indicate that all testing in this area was executed as planned and no errors were noted. You'll see that. Next item we note is grant revenue and grants receivable. This is a risk due to magnitude and due to the fact that there could be issues with respect to recognition versus deferral. So we confirm all grant funding with the ministry. Any deferred amounts, we review the deferrals to ensure there's appropriate basis for that deferral, and then we perform related. Finally, management override of controls. This is a risk in all audits we perform. This risk exists because in any organization, management can override internal controls. This can happen either intentionally or unintentionally. See on the right-hand side, there's a number of procedures that we perform to mitigate this risk. Mainly, we review all general journal entries posted through the year to ensure that there's basis and approval for those entries, and any entries that are outside of the normal course of operations, we also look at any significant estimates to ensure that there's no underlying bias in how those estimates have been reported in the financial statements, and we incorporate an element of unpredictability into our audit procedure. On to the next page, I'm going to cover the first item before passing it over to Mohammed. Bill 124, which is an interesting item, and it has been in the news. And there is no impact of this on your financial statements, but I wanted to cover it off just because it is a front of mind item that has been in the news. Just as a refresher, this was a piece of legislation, provincial legislation enacted in 2019 that limited public sector wage increases to 1% per year. In November of 2022, it was struck down by the Supreme Court as it was deemed unconstitutional. The audit risk that this presented to us is that there was a potential for back wages to be owed to employee groups under these union contracts, and those may or may not have been required to be accrued into the August 31st financial statements. As of very recently, just last week, there was mediation with 3 unions representing public boards, so that's why this does not impact your statements. 3 public boards agreed to specific remedies for those 3 employee groups and have agreed to pay out at set percentages. To date, there has been no such negotiations with employee unions within Catholic boards. Therefore, there are no amounts as of this date that will be required to be paid to employee groups due to the issues relating to Bill 124. That may change in the coming months. However, if it does and you are required to pay an amount, that amount will be funded by the province So it will in fact be an in and an out, and that's what's happening with the public boards, and we were directed as such by the ministry and the Auditor General's office. So in summary, there is no amounts accrued in your financial statements in respect of back wages regarding Bill 124, nor is there any disclosure, because at this time, it's just essentially a cloud that's looming overhead that we don't know how it will ultimately settle. When it does, we will speak next year and update you on tax fiscal 20. Any questions on either Bill 124 or the other information I've spoken about before?
Laura, go ahead.
Through the chair, just to confirm, did you say that if it ends up that there will be back wages, the ministry will fully fund those back wages?
That's correct, and that's what they've agreed to do for the public works.
Continue, please.
Thank you, Marcus. Can everyone hear me? Perfect. Okay. So I'll take over from the second section of that page, the adoption of public standards 3280 asset retirement obligations. So the risk around the initial identification and measurement of the board's AROs was required by the standard, which was effective as of this year end. And in its ARO assessment, management identified several asset retirement obligations related to the removal of asbestos and other related materials in older buildings. So we assessed management's ARO calculations and reviewed the estimates and underlying assumptions to ensure they were in accordance with the standards. We also reviewed the calculation that management relied upon the facility staff as well as external consultants to ensure that the calculations were complete and the estimates were reasonable. And as a result, management recognized a liability of $13.5 million for fiscal 2023. The financial statements were restated for prior comparatives related to the liability and recorded through the accumulated surplus. As the tangible capital assets with AROs reported were already fully amortized prior to fiscal 2022, the tangible capital asset balances were not restated. Related disclosures for this were in notes 1, 2, 7, and 8. And for further context into understanding AROs, we have included spotlight pages in pages 81 and 82 of the report for your reference. Moving on to the next page, the other areas of audit focus. The first two I'll go over briefly. Payroll and capital asset acquisitions. The risk for both is primarily due to the magnitude of the balances for the board. For payroll, we tested the payroll using a combination of tested controls and analytical procedures, including analysis of the related year-end accruals. For capital assets, we performed audit procedures, which included substantive and analytical testing. For both construction in progress and capital asset additions, we reviewed the amortization rates for amortization and tested the reasonability for the balances as well as for indicators of impairment. All our audit testing for both of these was executed as planned. And then the final item on the page is long-term disability. The board self-funded its long-term disability benefit plan for employees. And in recent years, due to COVID-19, the claims had gone up significantly, resulting in the impact on the cash reserves, as well as a depletion of the cash reserves to cover the deficit. The audit procedures related to this were in substantive and analytical testing to ensure the year-end surplus and annual expenditures of the plan were reasonable. And during the year, the board obtained advanced ministry funding of $19.379 million to help fund the LTD benefit plan through a cash advance agreement, which is expected to be repaid through a future proceeds of disposition on an asset. All our audit testing on this area was also executed as planned. The next page reflects the internal control matters. During the course of our audit, we came across a few control improvement points. The items below at the bottom of the page don't reflect a control failure, but are merely just suggestions which can be used to strengthen the controls further. We've noticed these points come up on some of our other school board audits, so it's very usual. And just a brief highlight on them, the first one is an exception we noted in the implementation of a new user access control within a payroll software. So we noted that there was no ticket available for this sample that we tested, and there is a risk of unauthorized access, and a recommendation is that all new user access granting respectively be documented, and this can be in the form of an email, ticket, or request form. The second control improvement point is that we inspected the network password settings and observed that the password restrictions do not meet the minimum standards of complexity based on our information systems auditors. And this presents a risk that unauthorized access to these applications can be had. We recommend that password settings should require complexity and the settings be updated to include one minimum uppercase letter, one special character, and a minimum of 6 characters. Again, these are just mere suggestions, and we've noticed some of these come up in our other school boards as well. So the next page reflects our adjusted and unadjusted differences. There were none for both. Just means that we didn't come across any adjustments during the course of our audit. Management did a great job in preparing the balances. Then the next page is other required communications. There's no pending litigations that came to our attention during the audit that need to be presented on this report, and no other significant issues or consultations. Pages 74 and 75 provide context on our audit process, from identifying risks to scoping and audit evidence, as well as reporting on our audit. Page 75 outlines the impact on our audit due to CAS 315, which is a change in the accounting standards for 2023. This change was to have auditors develop a more robust risk identification, assessment, and response approach to the audits. This was implemented for the year-end audit for the school board this year. And then page 76 is a good overview on how we approach our audit and our audit process in action. On the right side of the page is a link that can be followed, which provides readers with an overview of our audit quality report and our progress towards achieving quality audits. Again, the next 2 pages, 77 and 78, reflect the usage of our BDO portal and digital audit suite during the course of our audit. We heavily relied on the BDO portal to complete our audit process this year, with management providing great support in uploading the audit documents onto the portal. And then pages 79 and 80 are some key resources related to our audits that are for your reference. They're also good informational reading that range from assessment of the 2023 federal budget and a spotlight on sustainability. The focus on sustainability has been a growing area on all organizations. It requires organizations to complete reporting that go beyond financials and demonstrate sustainability in non-financial metrics. Resources are a great start, and if there are any questions, we have a specialized team available who can assist with the reporting where required. And then moving on, pages 81 and 82, these are the spotlights on the new standard for AROs, and is reflective of the process followed by management in preparing the ARO assessments as well as the final balances. And then finally, our appendices that are for the range from the auditor's report to the PSAS update. The independent auditor's report reflects a clean audit opinion consistent with last year. The representation letter is a copy we'll have signed from management when the financial statements are approved. And the PSAS update, the final appendix, reflects the updates / changes to the PSAS accounting standards that are expected to come through in the next few years. The standards coming into impact for fiscal 2024 have already been outlined in note 25 of the financial statements. Any questions on the rest of the report?
Any questions? Seeing none? Go ahead.
Through the chair, that completes the presentation of our financial statements. We'd be looking for a motion approval on number 1, please.
In this report? Yep. Laura, go ahead.
Through the chair, I'm not sure. I think this is more of a question for Brian than the auditors. With respect to the ARO amount, is it a list of specific identified buildings or land sites? And if so, what would happen if a cost came along that wasn't part of that list? Does it come out of the balance, or do you have to expense that immediately?
Through the chair, that's a great question. So the liability is a review of all of our facilities and what's in those buildings. So it could include things like oil tanks or other items that we would have to build into our estimates, but we don't have any of those complications. We're fortunate that way compared to other school boards. Our fleet, the biggest liability component is asbestos, whether it's in the pipe wrapping, tiles, different fire protections. It's only in buildings that are kind of pre-1990. So we've gone through that assessment. We know which buildings have that. We've always had that inventory per health and safety standards, but we now had to kind of quantify what it would take to fix that if we had to remediate that kind of today. Change in estimates could absolutely happen. So we'll continue to review our buildings, look at them. As we do work on the buildings, we would reduce the liability if we remove that. But if we determine that maybe there's larger quantities than we'd originally estimated, then we would absolutely go back and review the liability, and you would take that expense in that fiscal year that you would discover that. So we anticipate, as this is new to us, and we continue to work on our buildings, that could fluctuate, but this is our best estimate at this point in time with the use of consultants in our facility.
Thank you.
Thank you, Brian. Any other questions? Seeing none, page 28, top of the page, the motion reads that the audit committee recommend the Board of Trustees approve the consolidated financial statements and related information of the Dufferin Peel Catholic District School Board for the year ended August 31st, 2023. Moved by Anisha. All in favor? Any opposed? Carried. Julie?
Thank you. Through the chair, there's no additional business. We move to section G, questions asked by committee members.
Any questions? Seeing none?
Thank you. Through the chair, no declared interest items. We move to the in-camera session.
Move in camera, moved by Laura. All in favor? Any opposed? Carried.
Thank you. So through the chair, we will move to in-camera. Anyone
Thank you and welcome back. In camera, we discussed and approved 3 items. Regional audit, internal audit team, reports on repairs and maintenance, and report and transportation follow-up, as well as internal audit status update report regarding a variety of different schools. Got a camera? Move adjournment.
Sorry, we may need to move that report.
Move that
From in
report.
camera.
Move by Laura. All in favor? Opposed? Carried.
That's
Adjournment.
adjournment.
Move adjournment. Moved by Laura. All in favor? Any opposed? Carried. Thanks very much, ladies and gentlemen. We will see you in February.